Hey, Daryl, thanks so much. All right, just plucked my microphone right out of its arm. All right, here we go. That's a good start. I think that's good luck. All right, I think we're all set. Okay, so let's go ahead and get a quick audio check in. Awesome. All right, let's grab some screen and take it from there. Okay, there we go. All right, so welcome to the webinar. And, for those of you that I haven't had a chance to catch up with, hope everyone's having a fantastic month. What we're going to do here, it's still January, right? It's not too late to talk about a 2018 outlook. And we're going to kick it off with a little bit of, really it's a two-part webinar. You're getting a twofer here this evening, in that I'm going to talk about my outlook, my watch list, and a lot of what's on my radar for 2018. And I don't mean this the next few weeks, but I'd say easily the next quarter or two. And then we're going to go into the tools that I use. I'm going to show you how to get them. The tools that I use to not only recognize these opportunities, but to trade them. And, of course, taking 30 years of what I've been doing and distilling them into, about 60 to 75 minutes is a challenge. So what I really want to impress upon you guys is that it doesn't have to be difficult, and sometimes you're going to use tools in that are unorthodox, or even maybe in a way that you haven't used them before. But I keep this in mind. In fact, I was just talking to a friend of mine, reminding myself that if most market participants struggle in the market, I'm realizing that I need to do what the 10% do. I need to do something a little bit different. So when you hear things that I'm using in a different way, let me know. If you don't understand some of the words, or you might have a different meaning for them, let me know. Like Daryl mentioned, I am all for taking questions, and this will be recorded, so it should be an excellent resource for you in the coming days, weeks, and months. All right, so we have good audio and video. Excellent. Great to see you all. Perfect. Okay. So let's get to it. All right, first of all, the outlook. Now, outlooks aren't about prediction. It's not about, buying today, setting it and forgetting it, and just leaving it alone until December 31st. It's about understanding where fundamental narratives, and price action intersect, right? We never just want to trade a story. We want to make sure that story is actually playing out in price. So we're going to talk about the stories in the first half of our talk here, and then we'll transition over to price. So these narratives aren't necessarily in any particular order. They're the ones that are probably, I think, moving the market the most, being talked about the most, and some of the ones that I'm being active in the most. So we'll go right through this list. And I think you'll find that once you find a narrative, for example, in financials, think about all the other places where the financials are going to impact your trading life. Think about the weighting financials have in the Dow, in the S&P. Maybe you're playing ETFs like the XLF. So none of these narratives is occurring in a bubble. There's connective threads, and there are implications that extend far beyond these. And that's what I love about trading. When you find those connective threads, it opens the whole market up. So you'll notice we're going to cover futures, Forex, ETFs, cryptocurrencies, everything, because they are connected. And that's really the fun of it. So let's start off with financial stocks, right? We just saw the tax reform. We have a lot of narratives out there about the repatriation of the dollar. So this narrative already in the first 3 weeks of January has evolved. And why is this evolving? What am I seeing? I think we're starting to see earnings coming out of, we're smack dab in earnings season. We're seeing some of these financial earnings with write-downs from the major banks and brokers. And the market's already discounted that the first quarter is going to be tough for a lot of the names that are heavily weighted within the XLF. So let me show you here. XLF is the financial ETF. Some of you may be familiar with that. The names that are inside this ETF are Berkshire, JP Morgan, Bank of America, Wells Fargo, and so on. This layout that I'm showing you is called my multi-chart. What I do is I take the main ETF or the index that I'm watching, And then I sort of give it an exploded view. In other words, if I were to look inside what the XLF really is and why it's moving up or down, it's going to be predicated on what's happening in every one of these names. And these names are listed in chronological order of their weighting within the ETF. In other words, the further down you go within the list, the less impact they actually have on the ETF. They're weighted less. So by the time I get down to Chubb, while it's a major player, it's not necessarily as heavily weighted as Berkshire or as JP Morgan. So when I talk about the financial narrative, these are the specific stocks. Now, if you don't know what the weighting is in a particular ETF or index, what you want to do, and this is really easy, it's a very simple tool that I use, head on over to a site called ETFDB. So I think it stands for database, ETFDB.com. And you'll do a search for, whatever ETF you may be trading, XLF, XLE, diamonds, what have you. Once you search for that name, it'll bring up a little bit of a brief summary, a profile. And what you're going to do is click on holdings. And you'll see here there's 68 stocks within the XLF. But if you take a look, really only about 5 of them account for most of the movement we're going to see. Take a look, 11.5%, 11%, 8.6, almost 8, 5 3/4, and then boom, we drop down to 2.5%. Now, every one of these has the potential to move the market, but the heavier weighted it is, this is what's known as the high concentration problem that's happening in passive investment. For investors, that's a problem. But for us traders, it's a terrific advantage. So know the holdings, right, of your names. So back to the financials. Now that you know what those financials are for those names, and let's see, Kathy mentions a great way to trade all those names without buying all the stock. Absolutely. It's the difference between playing the tide versus the boat, right? There's no boat unless it's a giant ship. There's no boat that's going to be able to fight an incoming or outgoing tide. Any of my boaters out there know you tie your boat up differently in a high tide versus low, right? So you think about these ETFs or indexes as the tide and those individual stocks as the boats. I think you start to understand a little bit more of the relationship. Absolutely. So you can play a grouping, or you can understand why that ETF might be moving. So we know the first quarter is going to be a little tough, but the remainder of the quarters are really going to be quite good. So one of the things that we've already done and we're going to continue to do is buy the XLF on pullbacks. And you can see here on my chart, so these are my trading charts. We've already done this a couple times, actually in early December, in late December, and really we're waiting to do it again here going into January. So what I want to do is remember that the narrative is very bullish for XLF, and so is the current trend. Now, you might say, well, Rag, how do you know that the trend is bullish, and how do you know when that trend shifted, etc.? In the second half of our talk, we'll get into what I call the TOPS indicators, and I'll show you how to get them for free, and you can determine what's happening. So first, big outlook, I want to look for strength in these particular names as they're connected to the XLF, and I want to continue to play the long side of this financial story. So XLF, like I have right here, the near-term opinion is bearish, that Q1, and I sure wish we were seeing some of these names with earnings sell off a little bit more, because that would have given us an opportunity to get in. But we won't, we won't lose faith. They're going to correct. All healthy trends do. Okay. All right. So what are some of the specific benefits to some of these, to some stocks with the tax reform? I think they're already names that we're very familiar with. And the ones that I've been watching really closely would be names like J&J, GE, generally speaking, and this is a great example. I love this example of GE, because just because there's a narrative that's positive from one aspect of what could move the market, just because there's a bullish narrative doesn't mean that there's actually bullishness in that stock. In fact, we know GE and Jack Welch has been losing his mind in financial media. Who hasn't seen interviews with him out there? He's losing his mind. He's watching his beloved GE, floundering under $17 a share. General Electric, look at this thing falling off the backside of the mountain. Here's a narrative that would be very positive. The perception is it should be very positive for GE, and yet it can't get out of its own way. So what's the lesson here? And this is going to save you a lot of heartache. Don't fall in love with a story unless that story is showing via price that is the way the stock is moving, or that is what the stock is reacting to. It doesn't matter if it's a stock, a currency, a metal, whatever it is, right? It's got to be where, like I mentioned already earlier, it's where narrative or fundamental psychology and price intersect. And here we see a disconnect, right? So this is a great example of, here's a great narrative, but total price disconnect. What do you do with a name like GE? Put it on the back burner. Heck, take it off altogether, because it's not going to give you the edge you need to put your capital at risk, okay? And, one of the things that we do is, I've been in the process of doing it, is creating some of these workspaces, and we're putting them in, I think, Dropbox. And yes, we do make them available to members to download, so you can have these layouts that I have. And just to give you guys a quick look ahead, the layouts that I use, these indicators, are also available on Thinkorswim. So don't worry. You're saying, well, I don't use TradeStation, Rog. No worries. They're available on Thinkorswim and also TradingView. I use these same indicators on cryptos, on cryptocurrency. All right. So that's the financials, okay? Moving on. And you know what? Let's move on to cryptocurrency. Like I said, there's no particular order I'm putting these in. These are just kind of, everything that I've got my eye on, all right? So what's the story with cryptocurrency? And I think this has been really interesting, the way the XBT futures contract has come out in Chicago. Actually, we have two out of Chicago. We have XBT and we have BTC. You might say, why am I trading the one Bitcoin? This is the one coin futures contract. This is actually much more friendly to retail traders who are looking to day trade the cryptocurrency markets without going through the exchanges. And anyone who's been trying to get involved in cryptocurrencies knows it's not really the price action that's been a problem. It's access to the market through an exchange that's been reliable. And so here come the futures saying, look, we've gotten a reliable exchange. We know how to handle the order flow. We're going to give you a little bit of margin, not a lot. We're going to give you a little bit of margin, and you can go ahead and play a 1 coin or a 5 coin futures contract, but Bitcoin only. So I focus on blue chips, right? Blue chips are what I consider to be the majors. And that means I'm focusing primarily on Bitcoin, Ethereum, and Litecoin. And one thing that I love about the way in which cryptocurrency has been maturing or evolving from late 2017 to early 2018 is the blockchain narrative is becoming more and more important. People aren't just looking to find that 7-cent coin that's going to $3, talking about something like Ripple. They're looking for, sure, that's still out there, that altcoin mentality, but I think you're starting to see traders like myself say, this is actually the evolution of currency trading. This is the evolution of Forex. By the way, Forex is the largest market on the planet. So when I think about what could be the second largest market, even eclipsing futures, I'm looking at the possibility of cryptocurrency, because when you trade Bitcoin, Ethereum, or Litecoin, you're trading that coin versus the US dollar. That looks a whole lot like Forex to me. In fact, it moves a whole lot like Forex. So when I started doing some of this analysis, I said, wait a minute, I know this market. It's kind of like the mix of a 1998, 1999 tech stock, kind of NAS-looking behavior, and it trends and it behaves in a 24-hour rhythm, a lot like foreign exchange, because it is currency trading. So why would I want to day trade these, and why do I think that's the evolution of this market? If you take a look at what's happening in cryptocurrency right now, okay, and I'm actually going to sign into TradingView. So for those of you that don't have a place that you are currently analyzing charts of cryptocurrency, I would highly recommend using TradingView And for our members, we actually have negotiated a really great rate for those of you that want to use this. So this is optionally a premium service where if you really want to dive into cryptocurrency, then I would recommend a platform like this. But a lot of my Forex traders use this platform as well. So I'm going to show you how this works. And if I'm looking at Bitcoin right now, first tip, okay, really basic, but one a lot of people overlook. Make sure you're charting the coin that you want to trade or buy on the exchange that you're looking to trade or buy it through. You know, if Bitcoin charts default to a Bittrex quote, right, on this platform or any platform that you're on, you may not actually see that quote on your platform. So make sure that you're looking at the correct exchange. The next thing is, and this is happening right now in Bitcoin, we have finally broken this uptrend. And for some people, I do realize this might be very painful to look at. The transition happened in late 2017. You know, all the hoopla was at mass hysteria as we were approaching that 20K. And I'll tell you what, this move where Bitcoin has shed 50% of its value, that is growing pains, gang. This is what growing, and they don't call them growing pains for nothing. The maturation of this market and meaning also other blue chip cryptos means that we take out that buy and hold forever psychology. So a lot of people ask me, Rog, are we going to 6,000 or are we going to 26,000? And here's the thing. I don't know how we get to 26,000. Do we go to 6,000 first and then go to 26? I'll tell you what, we might take the scenic route, but I am looking for higher highs. So part of the strategy that I have right now is looking for opportunities to get long. Right now, you'll notice that as compared to on the way up higher, okay, Bitcoin has started to find a range. And the reason that I say for a lot of traders that day trading this market makes a lot of sense, and it's not just for Bitcoin, but it's any market stuck in a range. Day trading makes sense because the market isn't moving with enough price range to justify, one, jumping on a dominant trend. We don't have it. And two, you're not going to get a lot of follow through. The market moves in that narrow range and then reaches the boundaries of the range and then trades back the other way. That is a perfect environment for day traders. Anytime you see a choppy market, that is a perfect environment for day trading. And I think, again, that's one way you're going to notice a lot of cryptocurrency traders are going to start to look at. I mean, HODL, how many of you know about HODL? That's actually, I think it was and Jared was telling me about this, Jared, who does simpler crypto with me, said, I think that was a mistype, a typo. Instead of hold, I'm going to hold Bitcoin, and he put HODL, and it just kind of caught on. And then it sort of turned into an acronym that stands for holding on for dear life. I want these folks out of there. I endearingly call them chuckleheads, okay? Anyone who walks into a market without knowing, having a trading plan, and just buys because they're buying the newest frenzy, they're always going to disrupt the predictability of price action. They're going to disrupt the tendency for technicals to work well. The sooner they're out of the market, and a 50% sell-off is going to do it, you're going to see people who either believe in the blockchain narrative or believe in cryptocurrencies in. You're going to have more serious players, and when the serious players are here, markets behave better. So a lot of people are kind of going, oh no, what's happened to crypto? It's all good, my friends. This is how it grows up, all right? And the other thing I'll tell traders who've been asking me, how do I short this stuff? That is what you want to focus on the futures contracts for. Because a lot of people, one of the initial panics that I think exacerbated the fall from 20,000 was when everybody wanted to trade cryptocurrency, and then the exchanges basically buckled under the weight of the demand. And then people were trying to type in, log into their Coinbase accounts or their GDAX accounts, and they couldn't get in. Well, look, people don't buy when they're panicked. They sell as soon as they can. And I think that really, which had nothing fundamentally to do with the cryptocurrency story, it was really an exchange story, exacerbated the fall from 20 to 10,000. All right. Okay, so next up, in terms of big narratives, and again, shifts for 2018. And again, these aren't for the next few weeks. These are for, I think, at least the next couple quarters, if not most of the year. Crude oil. So crude has been on a tear. We've seen the rally, and we've heard about the increased output. In fact, the U.S. is going to be at crude oil outputs that we haven't seen since the early 70s. I think since the Nixon administration. That's the level of output that we are now at in the U.S. And yet, nobody seems to care about the glut narrative, because for about, I don't know, 4 or 5 inventory releases in a row, we've had consecutive drawdowns. In other words, when we look at inventories and how much crude is out there, we're seeing a reducing number. Now, I don't know that it takes us out of glut territory, especially when we still have a lot of the OPEC producing countries, non-OPEC producing countries, and now the U.S. cranking out some crude, right? Even with the production cuts, OPEC countries cut production after they went to all-time highs. That's like taking your car to red line and just getting off the gas. Forget the brakes. You're just getting off the gas. You're still moving really fast, right? That's what happened. But here's the thing. Talk about a narrative and price action disconnect. Right now, XLE, the USO ETF for crude, and crude oil futures continue to rally. Even unleaded gas is benefiting a little bit, but unleaded gas has been suffering from a little bit of the glut story of its own. Because what happens when you refine crude? Well, some of the drawdown in crude is just being converted into a little bit of a glut for unleaded. But again, the market is in full-on honey badger mode. It doesn't care. It just doesn't care. All right. So what I want to do is respect the uptrend that is, look for opportunities on the XLE. And this brings up a little bit of sector rotation, because sector rotation is just a fancy way of saying momentum trading. When a particular sector, in this case we can track these with ETFs, starts to lose momentum, what happens is the market starts to roll out of that market and look for another market that's heading higher. So sector rotation really just turns into, I'm getting out of one market that seems to be losing some steam, and I'm looking for another that's gaining it. And so I think in some ways you're seeing the energies benefit from the continued bullish momentum, and it's been a beneficiary of sector rotation. Okay. When you listen to financial media, they make sector rotation sound like such a sophisticated thing. I'm telling you, gang, it's really just momentum trading. Okay. Don't give those guys and gals on Wall Street that much credit. All right. I'll place my bets on a smart and disciplined retail trader any day of the week. All right. But again, look for that momentum. So if you're in a sector or an ETF that's starting to lose a little momentum, you might then see that particular name might be subjected to the bad side of sector rotation. You'll see traders bail on that and look for a strong market somewhere else. Okay. All right. So I talk also about 2 markets you really want to keep an eye on for the inflation narrative, because you have central banks all over the planet that are trying to understand when they're going to see inflation in their economy. And one of the best ways, I call them 2 canaries in a coal mine when it comes to inflation, is what is crude oil doing and what is copper doing, because both are reflections of growth and expansion in an economy, more than darn near anything else, crude oil and copper. So I think you're going to notice that crude's going to continue to gain. And even though copper's been ugly, and you can play copper a number of ways, the JJC ETF or also HG futures, the uptrend on the weekly has been very steady, and I suspect it's going to continue as the inflation story gets better. Now, why would the inflation story get better? This is going to take us over to currencies. Weaker currencies, like what we're seeing in the dollar right now, just in that weakness, are inflationary. Weak dollar is typically going to help commodities head up higher. So while it's not specifically kind of tactical, generally speaking, it's easier to want to make a bullish bet on commodities when the dollar is just getting hammered. And today was a great example of, this was probably one of the most frequently asked questions I had. Rob, what happened to the dollar? Well, number one, if you look at it on a 5-minute chart, it does look super dramatic, doesn't it? no doubt. Around 1:30 Eastern, we took off from about 88.50 and went right up to almost 89.40. We put on almost an entire point on the greenback very swiftly. And when you look at it through the eyes of a 5-minute, that does look like a lot of drama. But when you look at it through the eyes of a daily, it barely even registers. It barely even registers. This is a downtrend. Now, people are asking me, Rog, how can the dollar be in a downtrend when we're going to see yet another series of likely 2 to 3, maybe 4 rate hikes out of the FOMC? You know, I've always been told that when you have a hawkish central bank or a central bank, you know, tightening, hiking rates, that's bullish for the currency. Well, this is again where narrative and price action, if they don't overlap, if they don't dovetail, you're going to definitely miss out on what the market is keying in on now. Okay? Now, would I say it's Mnuchin? You know what? If you look at the timing, both the president and the Treasury Secretary spoke earlier in Davos. And our rally happened much, much later in the day. And the one thing a lot of non-currency traders did not realize is that the ECB had their central bank release today. They had the press conference and they made a decision on rates. So the euro was actually in play. Anytime you're playing the dollar, you have to watch the euro. This particular market right here is the largest market in the world. Okay, so when I talk about a 2018 outlook, and how many of you are with me for my 2017 outlook? Just out of curiosity. Show of hands, I can't see. Is anybody with me for that 2017? Because back in 2017, January, around the same time, I said, you know, my 2 big trades for 2017 are going to be buy euro and buy pound, and number 1 was buy euro. Because we were looking for the ECB, Mario Draghi, think of the FOMC's counterpart in Europe. Mario Draghi was going to start to taper. Now, you guys remember back in 2014 in the U.S., that's all anybody could talk about. When is the FOMC going to taper those asset purchases, right? That's where the ECB, the European Central Bank, is right now. So one of the biggest trades we put on, actually this was my biggest trade by a long shot in 2017, was buying the euro at 108.55. Okay. Now, this is where it kind of feels really ridiculous for me to put ROIs out there, but just to give you an idea. All right. One lot of the euro is approximately 2K. And this is on the Forex side, which is, again, the biggest marketplace for currencies. Now, you could play this on the ETFs with FXE. You can play this on the futures with the 6E. So there are multiple ways you can play this euro versus US dollar relationship. The largest just happens to be in the foreign exchange. So each contract runs you 2K, and this thing moved from 108.55 to 24, you know, whatever we're at right now, and that's approximately 1,600 pips. Okay, each pip, and all pip means, think of like tick in the world of stocks or futures. It's the smallest increment that a market can move, so like a tick or a point, right? Each pip in Forex parlance is worth $10. Okay, so for every $2,000 position that I put on at 108.55, it returned, yeah, if you do the math, right around 16K. Okay, now the reason I'm mentioning this is not to be salt in a wound, because today, and for my traders who've been with me for the last year, we hit the level that I talked about last April. When we bought 108.55 and people said, where do you think it's going? I said, it's going to $1.25. And after all this time, today, we hit the $1.25. That was a great feeling. So let me let you in on what my next big trade like that is. And it's the pound. How many of you remember the disaster that seemed to be Brexit in the UK? I have traders over there, and it was absolutely just pandemonium. Well, that pandemonium actually eventually became something we accepted, we discounted again, we panicked over, right, for the better part of 2017. But if you look at the second strongest currency last year, it was the pound. So what is my play, like my euro last year? It's buy pound. Not only is it buy pound, it's buy FTSE. right? So I'm coming to you guys the 25th day of January. We've actually had this trade on since the very end of December and the very early part of January. So this is about 3 weeks old now. We've already seen a tremendous rally in the pound just in the last 3 weeks. In fact, our position started getting built back in November. We had another shot at it in December, and we had another shot at it in January. And believe me when I tell you, healthy trends correct. We will have more opportunities. But most of the positions built between 132 and 134. All right, we hit, so from the 132 and change position, we hit 142 today. That's 1,000 pips, gang. And that's 1,000 pips in just a very short amount of time. I still think we have plenty to go. And you might say, well, how much more to go, Rog? Have I missed this? Let me show you this chart. This is a weekly chart of the pound. Okay, yeah, we've started to get up the foothills here, no doubt. I still think we have upside targets of 150 and 160. So I'm talking about another 900 and possibly 1,900 pips. Okay, that's 9,000, okay, to $19,000 per lot. Just because I know not everybody trades Forex and they may not understand what a value is. And this is what 50 to 1 leverage will do. Now, before anybody says, Rog, I don't trade Forex, no worries. There's British Pound Futures, and there's also the FXB Currency Share ETF. Again, when it comes to currencies, lots of flavors here for you. Pick the asset class that you're most comfortable with. Heck, you can play options on the British Pound Futures and on the FXB. Along with the recovery out of the UK, again, when I think about what those markets are, emerging markets and currencies where I can sell dollars, because I think the dollar is going to continue to head lower, and buy another currency that I believe is now on the verge of a pre-tightening cycle. And let me tell you something. By the time a central bank hikes rates, at least 40 to 50% of the move to the upside in anticipation of that is already done. You're not starting to buy the pound when Mark Carney and the Bank of England hike the rates. You're buying the pound in anticipation of, which is why we're getting to this now. And the EWU, that's not going to benefit from higher rates. Most stock markets don't. But what we're seeing is the market pulling out of some of the worst of the 2016 and even 2017 lows, as all the negative news, all the political shenanigans have been priced in, and the data is looking pretty decent out of the UK. And here's the other thing. It looks like we're going to have a soft Brexit. So I think we still have plenty of upside on the FTSE, especially if, and here's a couple keywords to keep in mind for this narrative, as long as the open passporting conversation is still positive, okay? And as long as, well, I guess Prime Minister Theresa May doesn't, continue to give up her Tory party's, the leadership has been terrible, right? They had a majority, they lost it. That's why through 2017, we had a really tough time gaining steam, but that's behind us now, right? Old bad news is just old news, right? I don't care if it's good or bad. If it's old, it's old. It's already been discounted. So when you look ahead, the new news is open passporting. The worst of Brexit is behind us, and we're going to start to see, probably in Q3 or Q4, Mark Carney and the Bank of England start to talk a little hawkishly. I'm thinking we have probably a good year to 18 months of strength ahead of us, but the best of it is going to happen now, gang. The smoothest ride is going to happen now, okay? So you have 3 ways you can trade that pound versus U.S. You can sell U.S. dollars, right? But you can buy pound, and that's FXB. That's British Pound Futures, or it's the British Pound versus U.S. on the Forex. And if you want to go the options route on pullbacks, I would just straight up buy calls. Okay. What's the FTSE? So the FTSE is like the Dow of the UK. It's their major stock index. So it's making a bet on the European economy. All right. So I think that buying equities globally is still the way to go. It's where the alpha is, gang. So when people tell me, that we're going to see a 3 to 5% move to the downside in equities, quite frankly, with as accelerated as we are on daily time frames, a 3 to 5% sell-off would simply be a dramatic probably stomach churning, but it would be a dramatic correction, not a crash. Okay, big difference. All right. So again, will the dollar continue lower? Yes, because there are new tightening narratives coming out of Europe and out of the UK. And by the way, and this is a unique, this is unique to pairs trading. If I buy euro, the mechanics of putting on that position means I buy the euro, but I sell the dollar. And a lot of people, it bakes their noodle. But I think most of you guys know this very tactily. It's very tactile. If you go to, we all got on a plane and flew over to London, which I'm actually going to do in a few weeks here. And I've got US dollars in my pocket. I'm exchanging it, right? I'm giving them US dollars. I'm selling dollars in exchange for what? Buying euro. Actually, no, I'm going to buy pound. I hope the exchange rate is not as bad. Yeah, I should think about that, right? So I'm selling US dollars and I'm buying pound. So I can't just show up with lint in my pockets and tell them, give me pound, can I? It's always an exchange. So when you think about the foreign exchange, the way in which someone puts on a long euro or long pound position is they sell dollars and then they buy euro or they buy pound. So realize euro strength and pound strength will always be dollar bearish. And before you kind of get hooked by any of those sexy narratives out there talking about the US dollar getting a big boost from repatriation from these companies that are going to be allowed to come back, so this little tax holiday they're going to get, they're already holding US dollars in foreign banks. They're not going to come exchange their franc or their pound or their euro for US dollars. They're already holding US dollars. So don't look for much of a bounce. If we happen to get one, sell into it. Okay? I would love to see that. I would love to see some fake patriation, rally, because that would give us a tremendous opportunity to buy euro, pound, heck, I'd even buy Canadian dollar, Australian dollar, and New Zealand dollar. Just pretty much anything against the US dollar. And that's going to be a fantastic trade that most of you can play on the currency share ETFs as well as the futures. Again, it's a big bet on a dollar short. And of course, dollar weakness is going to be inflationary, right? And while the dollar heads lower, for those of you that are gold bugs like myself, it makes a lot of sense to be bullish on gold, which we have been for a really long time. In fact, today we just got long gold again. So let me show you what's going on with gold right now. And this is an inverse relationship to the US dollar. So if you see the dollar heading lower, gold will usually head higher. So on the days that the US dollar rips higher, you're going to see weakness in gold. Take a look at opportunities to buy. In fact, we just did it today. We bought the 1350 level. We're already up almost 6 points. That's $600 per contract, gang. And I'm looking for another move up towards 1360 to 1370. This is our second trade in about the last week, long in gold. So when I tell you I'm a dollar bear, this is very much related to that. All right, so think about how some of these currency stories are going to relate back to the gold market, and I see a lot of upside for gold. You can play gold futures. You can also play the GLD ETF, okay? GLD ETF. So I think these are trends with big profit potential on the backside of the US dollar weakness. Not only the euro, you can look at, say, FXE, that's the euro ETF, okay? You can look at the euro FX futures or the Forex, and then look at GLD as another way to play that US dollar weakness, okay? So I think right now is a great time to mention that if you want to follow along with some of these trades like what we did in gold, next week I'm going to be doing an open house Monday, Tuesday, and Wednesday. And if you head on over to simplertrading.com/live right here, www.simplertrading.com/live, you can sign up for the free open house that we're doing. And during this open house, you're going to have full access to the gold online trading room. So it's not only going to be me from 8 to 9:20 a.m. Eastern. Then you have Neil Yeager taking you through the open intraday trading till approximately 11:30. And then Mr. David Starr from the voodoo lines and ready, aim, fire, and a lot of indicators you know and love, takes you guys into lunch. In the afternoon, we cover Forex, we cover blue chip crypto, and then I take you through into the close. And in between all that, you have an hour of simpler tech. So the schedule will be available, but Monday, Tuesday, and Wednesday. Monday, January 29th through Wednesday, January 31st. Sign up at simplertrading.com/live. It's absolutely free. So join us for that, and you can see more trades like gold. In fact, we're looking to get in again. All right, so back to the outlook. Now, all this stuff sounds great, right? Okay, I mean, I think it does. That they're already working. So for a lot of you saying, okay, Rog, you're telling me that healthy trend's correct. Well, how do I know it's a trend? How do I know it's healthy? And how do I know what a correction looks like? You know, one of the things that I get asked a lot when I'm out traveling and speaking is, you know, what's this correction? What's this crash look like in equities? Because everybody seems to be, even if they're invested in the markets, really fearful of this potential crash. And I'll tell you what, and I was on a panel not a few months ago saying, look, this isn't going to happen in one candle. It may happen in 1 week, but it is not going to happen in one candle. There are clues to corrections. There are signs. For me, they're visual. And for me, they're going to start with subtle price shifts. And to me, one of the easiest ways to understand subtle price shifts is with the charts. So this is where I want to talk to you guys a little bit about the TOPS indicators, okay? So first of all, before I get too ahead of myself, because this is the question I always get is, where do I get it? Where do I get these indicators? So for the Thinkorswim platform, and let me see here, it's a shared chart. So if you're on Thinkorswim, and I'll show you how to open up a shared chart in just a moment, all you need is this link. If you just want to write it down, that's cool. And it's this right here. And I think I can push it through the chat window. I sure can. So you'll see in the general chat, I just pushed through the link. In fact, I can send it up in the main alert area, I guess, as well. But yeah, see that link that I just pushed through, tos.mx, etc. Jot that down, because that's the shared chart. Now, if you're on Thinkorswim, it's really easy. All you need to do is go onto your platform, and let me see, here we go. Go onto your platform, and then you'll see in the upper right-hand corner, there's a little gear and the word setup. Click on that, and a drop-down menu will fall, and I think it's the second or third one down. It says Open Shared Chart, and then you're going to type in or cut and paste. You can copy it there, the link, and it will automatically open the indicators that I'm going to teach you how to use. And then all I would recommend you do is go down to Studies and save it as a study set. So if you're a Thinkorswim user, you know exactly what I'm talking about. And again, open up the shared chart, maybe make some adjustments to whatever it is you like, whether it be background, etc., and then save it as a study set. Really easy on Thinkorswim. It's really easy on TradeStation too. All you need to do is head on over to the Trading App Store on TradeStation. Now, you can do that from within the platform. So you can go right through the Trading App Launcher and go to the Trading App Store. All right, and we use these tools in the chat room every single day. I'll talk a little bit about them here in a moment. But, you know, getting them on your chart, playing around with them, see what they look like. And I love this. These are available for free, my dear friends over at Trading Station. And it tickles me every time. You don't even have to go searching for them, gang. These tools, the simpler trading tools, are the 3 most popular indicators on TradeStation right now, which just tickles me. So head on over to Trading App Store. You'll see them right there. They're free to install. Just click on Install, 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 and it's done. That's it. Okay? Super easy, and that will put the tools on the charts. Okay? And actually, I'll push this link through as well. Okay. And that's where you get the links in the Trading App Store. If anyone's on the Sierra platform, the Sierra Charts platform, this is really easy. I'll just the easiest way to do that is talk to Patrick over at Sierra Charts. And Patrick can just push that set of tools right into your platform. So, I mean, that's really easy. And if you have any, if you want to reach Patrick, you can do so right here. All right. So again, I want to make this installation as easy as possible. So just talk to Patrick. I think it's just pz@infinityfutures.com. And then finally, my beloved TradingView. So this is the fourth platform this is available on for free. When you go to TradingView, you can either pay for it or you can use the free version, but the free version will limit you to 3 tools. Well, you can just make the 3 tools, the grab, wave, the tops indicators, so grab, wave, propulsion, and Darvis. So you click on indicators within TradingView and you simply type in simpler and it will do a search for all the simpler tools. And if you notice in this list, there's a few without that little red lockbox next to it. 1, 2, 3. All you need to do is click on these 3. Just click once on each one of these. It's a hyperlink, and it will automatically populate that indicator on your chart. That's it. 3 free indicators, and then you've got the tools on your TradingView charts. Okay? All right, so that's how you get them across Sierra, TradingView, TradeStation, and Thinkorswim. So the layouts that I'm showing you guys, this one you'd have to create on your own in TradingView. Toss, you have my shared chart now. And these multi-charts, gang, I make these available to members. So there's a Dropbox we have in the members area, and then you can go ahead and download my personal workspaces, okay? All right, so, and that's any of the members within any of the simpler trading sites. All right, MT4, no, MT4 isn't even a, I believe they're phasing it out for MT5, and no, I do not have it for MT4. Just really limitations of the coding, of the MQL, the code base, yeah. So I'm sure someone might cook it up eventually, but no, I do not have it for MT4, and in fact, they're phasing it out in favor of MT5, which uses a completely different code. All right, so that is how you install it. Now, what is it? How do you use it? What is it? So let's talk about support and resistance for a moment and the subjectivity and the time that it takes. Partly the learning curve for most traders is just the manual way in which lines have to be drawn, levels have to be recognized, etc. And then, of course, there's the growing pains, the learning curve of making sure that you're drawing the right ones. Well, the only thing that support and resistance is ever really supposed to tell you is whether a market is going to accelerate through that level, exhaust at that level, or reverse from. So the only reason we're drawing any kind of line on our chart, trend lines, horizontal support and resistance, chart patterns, pivots, Fibonacci, you name it, the reason that we place a line on a chart, whether, again, you're thinking about it consciously or not, is because you're anticipating some sort of reaction, okay? And there's only 3 reactions. If you don't get a reaction at your levels, you're not habitually finding levels that the market is respecting as important, okay? And this is where I'm such a big fan of the automated support and resistance of the Darvis 2.0. Now, Simpler basically took an indicator. Some of you might have heard of Nicholas Darvis in the book, How I Made $2 Million in the Stock Market. And Darvis boxes come from Nicholas Darvis. And the calculation, which I won't bore you with, but we have some free, well, actually, there are webinars within the members area where I talk in a little bit more depth about what this tool is. But here's the thing that you need to know. Darvis, unlike most other methodologies for discovering support and resistance, here's the kicker, is actually based upon previous support and resistance. And while that might sound really weird, if you think about what a trend line is or most projected lines or levels, they're not necessarily lines and levels that were previously reacted to. So what I'm honing in on is the automation of finding lines and levels that we've actually stalled at before, that we've actually reversed from before, right? That's what Darvis identifies for us. That's the value in it. And then when you automate the whole thing, now you're taking a huge layer of subjectivity out. And when you start to automate these, you also realize, well, Darvis doesn't care what our bias is. Darvis doesn't care, whether or not we want to be long or short. It just knows what it knows, right? It's not projections of potential support resistance, but actually proven previous levels. So you take guesswork out of one of the most basic aspects of trading, finding support and resistance, completely off the table. So that's one of the tools that's included in the tops, okay? The next thing is my wave and grab. Now, the wave is just I say just, but it's really magical. It's 3 34-period exponential moving averages, one set on the high, one set on the low, one set on the close. It's 3 of the same periods with the differentiating factor being the high-low close, okay? So 3 moving averages. And then you'll notice my candle colors, and I'll just throw another stock name up here. Okay, throw some Apple up here. The candle colors are plotted based upon the relationship to these 3 moving averages. So if we close above the 34 EMA on the high, which is this green line, we're gonna plot a green grab candle. And grab is just an acronym for green, red, and blue, right? Really original, right? Green, red, and blue. That's it. If we close inside the 34 EMA on the high and the 34 EMA on the low, so the red and the green, if we're inside here, it plots blue, like you're seeing right there. And if we plot below the 34 EMA, the red on the low, we plot red. Now you'll notice there's 2 shades of each candle. This is where I brought the more traditional interpretation of Japanese candlesticks. So the upper close, or a hollow candle, or a green candle in traditional Japanese candlesticks, that's the lighter shade of green, red, or blue. And a down close is the darker shade. So an up close is red, or, well, actually light red, light green, or light blue. And a down close is dark red, dark green, or dark blue. But the green, red, and blue give you a very quick interpretation of trend. Let's grab Boeing for a minute. Number 1 weighted stock within the Dow. Solid green. Well, one little lonely blue there. When I glance at this chart on a daily time frame, there is zero doubt in my mind the strength and quality of the trend. Now, a lot of you might say, well, Rob, yeah, no duh, Boeing's been heading higher. But here's the trick. When would you have assessed that? And furthermore, when would you have tried to re-engage the trend without randomly buying a new higher high? How would you recognize what a correction is? That's what the wave and grab can help you do. So the grab's telling me with the consistent green candles that I have a bullish bias. I want to buy. The wave is telling me that when we correct back down to it, this thing's essentially on sale. Now, daily candles are not going to give you entries every day. Heck, they may not give you entries for weeks, but you're also taking advantage of a very long-term time frame. So having the ability to know what the value of that correction zone is, and you will know what that is because all you're looking at is the value of a 34 EMA on a high, on a low, or on a close. That's going to be plotted within your platform. So that's where I will put a limit order to buy at those values. And I may wait days, sometimes I may wait weeks. But when the market trades back to that level, which I'm constantly updating and modifying based upon the value of these moving averages, eventually we're going to catch up. Same thing happened on the euro for me. Same thing happened on the pound for me. Same thing happened on Boeing. So you might ask, well, where does the support and resistance of Darvis help? Notice how often on a few of the pullbacks, not all of them, but quite a few of them, we not only found support in the Darvis, we found support in the wave. And sometimes we didn't even reach the wave, the Darvis helped us out. And there are more aggressive entries that the Darvis will help us identify. I'm showing you the most conservative. I'm showing you the easiest to recognize. Okay? So what, again, the grab candle's job is to help you identify clearly the direction of the trend and when it might be transitioning. So if we're fearful of a correction, shouldn't it break down through a Darvis? Shouldn't it start to plot probably neutral blue grab candles? Shouldn't it then maybe start even plotting red grab candles? That could be the warning. That's the shot across the bow. Not that a downtrend is coming, but that the bullishness, the organization of the uptrend might be waning. Okay? So that's what the grab will do. The Darvis, as I mentioned, is going to automatically identify the support and resistance. So some of you might be wondering, what's the difference between a purple Darvis and a yellow? Well, that has to do with the way Darvis is plotted. There is a methodology to this that I did manually from about my late teens to early 20s. I did it manually for probably the better part of a decade. And then I just kind of shelved it and just started drawing them, because after a while you understand why they plot, and they're not terrible to draw manually. But if you're looking at 4, 5, 6 time frames across dozens of symbols, it's just going to slow down your analysis. And what if you miscount, right? Nothing like automation. So the yellow Darvis are plotted after the market makes a new minor high. In other words, they're kind of a bullish box. The purple or the magenta Darvis boxes are plotted after the market makes a new minor low. So it's a little bit more bearish in terms of the reasoning for that box to exist. Are the colors that important? Not really. Not really. But it does give you an idea of where the Darvis box count started. For a purple box, that low started it, and then it completed with this candle right there. For this box here, I know a high started it, so that's the count. And then I know that it completed probably right here, okay? Now, here's a great thing. You don't have to trouble yourself with the learning curve of learning how to draw Darvis. And you'll see how many I have. Can you imagine having to do this manually every day? No way. That's why we've automated it. And the reason I call it Darvis 2.0 or modern day Darvis is, we at Simpler, realized that when you back test Darvis in its traditional form, it actually back tests very poorly. And we made a couple tweaks to it. And this is really, again, I'm kind of giving a nod to Nicholas Darvis because this is, his creation, but we kind of tweaked it a little bit. And I have to say, humbly, we made it a whole lot better. Okay? So automated support and resistance, automated trend recognition, automated trend organization, right? A gauge for that. And then the last thing, and I brought this on recently, and this is the propulsion dots. Now, propulsion dots are actually a way to visualize 2 moving averages that I've been using for a very long time. And that is the 8 and 13 or the 8 and 21. Okay, these are 8 and 21 EMA based. It's an 8 and 21 EMA based tool. Now, if I just put the 8 and 21 up there, it wouldn't tell the whole story. It's the way they interact, the way they cross, when they separate, and a few other things, a few other, calculations built in. But suffice to say, it's when the 8 and 21 are interacting to tell me this one very important thing. When is the market starting to accelerate? Right? So we're already heading down the highway. We're already screaming down the highway. Normally you're going to see propulsion in markets that are already trending, maybe freshly trending, but they're already trending. They're showing trending characteristics. But when are we starting to hit the gas pedal? When are we flying down the highway and we gave that gas pedal another push? That's what that's what propulsion tells me. And it's a very good complement to the wave, because the wave's just going to keep like a workhorse showing me the overall psychology of the market. But propulsion tells me something a little special. This market's a little bit more amped up. This market's a little bit more bullish. And for those of you that are momentum traders or like to use the squeeze, a simpler trading squeeze, you're going to love the propulsion dots, because they're going to give you another layer of confirmation that if you get a breakout through resistance, a squeeze suggesting we're going to start to see some momentum behind those higher highs, propulsion's giving you a lot of insight into the fact that the market's got its foot on the gas pedal. By the way, if you like the squeeze, propulsion and Darvis are a perfect complement. So a lot of you are probably using some tools like the squeeze already. You know, how do you add a few more tools to draw some lines in the sand as far as when we could see the trigger of acceleration to the upside or when the market's most likely to follow through? Look no further than Darvis and propulsion. Fantastic complement to that. All right, so I would also say when it comes to propulsion, it's almost as important that it's plotting as it disappears, as it's not plotting. If you see the dots were plotting for a while and then they back off, that means the market's basically taken its foot off the gas pedal. And that alone can be really powerful. So it's not a matter of, okay, we're screaming down the highway, but when have we started to back off the gas as well? So pay attention to when propulsion is plotting and when it's not plotting. All right. And these are ways that we can better identify the quality of a trend. Okay. So again, all these tools I just showed you all, and this is being recorded so you can kind of watch at your leisure. It's available on TradingView, TradingView, TradeStation, Thinkorswim, and also Sierra Charts. Okay. All right. So next up, let me tackle some questions here. So how are we doing so far, gang? How's everyone doing? I'm going to show you one extra tool here, and I'm going to take some questions. And this was something that we really didn't talk a lot about in the emails leading up to this, but this is a tool that a lot of you asked me to at least touch on today, and I'll touch on it. And then when you guys join me on Monday for our 3 days of live trading, you're going to see how I put this thing to work. And I just wanted to remind everybody, again, on Monday, this coming Monday, and you can sign up for this over at simplertrading.com/live. It's actually our free 3-day open house. So you'll get to see how I put these tools to work in a live market, in ETFs, certain heavily weighted stocks within our index futures, the futures markets, even the currency trades. And you'll hang out for the whole day because you're getting 3 full days of access where you join me in the morning at 8. I'll take you through the sort of the pre-market. Mr. Neil Yeager takes you guys through the open. It's a fantastic intraday trader. If you're looking for those nuances for intraday trades during the open, excellent time to join Neil. Mr. David Starr takes us into lunchtime, voodoo lines, Elliott wave, RAF. That's absolutely the kind of thing that he will take a look at. He's been slaying it in bonds lately. And then going into the afternoon, we have Simpler Tech broadcasted into the room. And then we also have sessions on Forex. We still do a lot of currency trading. So Forex, and then also blue chip crypto. And then I take you into the close. So you'll end up with 3 full days of access with the 3 of us. And again, you can sign up at simplertrading.com/live. We have not done an open house in about 42 years. No kidding. We haven't done, so we don't do it often. So even if you think you can't attend all 3 days, what I would tell you to do is go ahead and sign up so you have a seat, and then you can come and go depending upon the sessions that you want to attend. You know, if you're interested in Elliott Wave, log in during David's session. If you want to trade the open, sit in with Neil. If you want to take a look at Forex or crypto, look at the pre-market, or trade the close with myself, I mean, you can pick and choose when you want to log in. So just make sure you reserve a seat for yourself. And I'm always kind of, you know, I remember the first time I saw this tool, and it was a dear friend of mine who showed it to me. His name is Alon and Eric. They showed me the tool, and I was part of the development of it. I was a beta test of the whole thing. And I looked at him and I said, how much do I have to pay you for you to never show this to anyone ever? And they kind of laughed. I said, I don't think you even realize what you guys have created. So how many of you are big fans of average true range or use expected moves and things of that, implied volatility, right? So this is a cousin to that, and it's called daily price movement ranges. And if there is kind of a cheat that I have, if there's a secret I have, this is it. Now, this is actually a whole lot better used in a live market than it is kind of right now. But let me tell you, where I've used this recently. That 6-point winner that we have in growing on gold was this tactic, what I call the DPMR, or daily price movement range strategy. The long position that we just took profits on in silver was a DPMR strategy. So SLV, GLD, and actually you can kind of follow along next week. We just got a long in crude with this strategy, and this is really where I'm super stoked about what it's been able to do. We got long. We've been getting long the Dow with this one tool, this one strategy, and today we got long NASDAQ. This is where it's so amazing. And one of my students said, I said it once, but I don't remember saying it, but it does sound good. I don't know how many of you saw the sell-off we had around 10 and then again around 3 today. And he said, Rog, you always tell us when other people are crying, we're buying. Well, the reason I have the confidence to do that is the way in which I can project with a 68% probability the range of darn near any market. And that's what this price action, this daily price movement range allows me to do. So if you imagine you had the ability to look at 90 days of price action and understand the typical price movement range for every Monday, Sunday, Tuesday, whatever, every single day. So if you love ATR, Mike says ATR rocks. You're right, Mark. It does, right? And I used to use it too. But once you understand what this does, it's gonna blow your mind. And it's really so much better to show in real time because we calculate these every day. This is a calculation I do every morning. So when you're with me in the chat room next Monday, Tuesday, and Wednesday, you'll get 3 full days of me putting this to work. Now, this is always applicable, but right now, in the way that these markets are just trending, almost accelerating with very shallow corrections, this approach has been literally magical because of the shallow correction. So let me give you one example on the ES and the NQ. How many of you trade NASDAQ and S&P futures? Well, we had projected, and then we sent out the alert, I believe it was 9:37 a.m. Eastern, saying these were, and I don't know if I may not have this handy. Oh gosh, maybe I need to bring this up. But we sent out an alert at 9:37 with the projected lows, what I call the DPMR low for the Dow, the NAS, and the SPOOs, the Dow, the NQ, and the ES. And then what we do is we place a limit order and we wait for the market to come to us. It came to us once at 10, and it came to us again, and with an even deeper pullback, deeper into that DPMR zone, just after 3. So we bought twice on these pullbacks. And I'm talking within points. The accuracy, gang, is within points. It's simple arithmetic, and yet it's just within just a handful of points. So and think about the implications if you're an equities player or a futures player. If you're looking at heavy-weighted stocks that are getting drugged down because of the weakness in the NAS, and you know that we're at a level that we're going to expect exhaustion at, we could catch a bid and start heading up higher, wouldn't that be a tremendous advantage? You know something the larger market doesn't. So as one of my members, one of the tribe members said, when everyone's crying, we're buying. And we did it twice on the NAS. Then same thing with the ES today. Again, it's the way in which we can project lows on the habitual patterns of these markets. Same thing on the ES. I think our zone was 36 to 32 in a quarter. I have to take a look. But that was what it was. So when I saw this low back here, same thing, 10 o'clock buy. They're crying, we're buying. Right into the close. I actually have a long NASDAQ and S&P position going into Asia. I'm long both those contracts because of this DPMR low. So I can't wait to show you how we do this in the room on Monday. So I promise that let's touch on it a little bit. And what we do is we take these calculations and I show you how to add and subtract them to project different kinds of highs and lows. And it's not that you just subtract them and buy it, indiscriminately. No, there's some work you do with the Darvis and the wave and grab and propulsion, but this is such an accurate way to project where the market could exhaust. It's uncanny. Dan asked, does DPMR work in an overnight? Absolutely. Dan, I'm long ES and NQ right now. It does. And you know what's really interesting? Let me show you here. And this is something a lot of traders don't realize until they see data like this. Number one, daily price movement ranges change depending upon the day of week. Not every day of the week has the same price movement range. And on the hourly, look at the rhythm of the day. Not all 24 hours are created equally. So here's a quick tip, Dan, that hopefully will save you a little aggravation and make you a little money. You have to reduce your price movement expectations after 4 p.m. until about 2 and 3 a.m. Eastern when Paris, Frankfurt, and London open. And then you see usually your biggest burst of participation after 8:30 if there's an economic release, and after 9:30 when the Wall Street bell rings. Look at how much we drop in terms of price movement range throughout the day. So when you understand these rhythms, you really feel like a magician. You really do. You just see things other people will not have the data to project. So I'm going to be super stoked to show you guys that and a whole lot more next Monday. Let me tackle a few more questions here as we wind up. Big thank you to everybody for making it out for this. I hope the 2018 Outlook gives you a game plan for where you need to put some attention, where some of these big trends might happen. Also, how to start to scan your charts, looking for those trends with visual tools. And by the way, regardless of the kind of strategy that you're using right now, the wave, the grab, propulsion, and Darvis will not supplant any of it. You know, one of the coolest things is I don't have to change the way you're trading. Because I'm using a philosophy of support and resistance that dates back to 1960, and I'm using a philosophy of market trends and psychology that dates back to when Charles Dow had a little newsletter that eventually became the Wall Street Journal, right? He talked about market trends a century ago. All we're doing is taking some modern coding and making those philosophies visual, usable tools, right? So once you understand underlying market trends and support and resistance, and then we throw in some of these extra understandings, it's going to completely change the way in which you deploy some of the tools you're using right now, some of the strategies you're using right now. So you don't have to go relearn anything. You're just going to be able to deploy them, I think, in a much more accurate fashion. All right, so we're having an open house on Monday. Brian asked how much. Brian, it's an open house. So after this session, you guys will get a replay, I believe, of this talk. All right. And I guess this ran about 60, 75 minutes. You can review some of these tools. Hopefully by Monday also, you can install these indicators. Okay. That would be a great thing to do. And that's why I showed you how to install these things. So maybe between now and Monday, install the indicators on the platform of your choice. That way on Monday, you're ready to go. On Monday, I'll show you how to get AutoChartist. Did I mention this is free? I'm going to show you how to get this for free and how to use it. So I know that sounds like a lot, but we're going to be together for 3 days, Monday, Tuesday, and Wednesday. Okay, and during the live trading sessions that we do every day at Simpler Futures, I do a session on not just, so some of you asked me about Bitcoin. We do have a 30-minute session every day on Bitcoin. We do also have a 30-minute session every day on Forex, and then I have an opening and closing session with all the tools that I'm teaching you on futures and futures-related markets. So sometimes that means we wander into some of the heavily weighted names within the futures or related ETFs, but the focus is futures and then currency, whether that be fiat or crypto. And then, obviously certain names are going to pop up as heavily weighted components of the NASDAQ, the S&P, and the Dow. So Monday, Tuesday, and Wednesday of next week, you'll see how we put these together in a live market. We send out alerts, and then we also have a spreadsheet. Do I have that running here? Hang on, let me see if I have the spreadsheet open. I think I do. So we have a spreadsheet of the trades, and we send out alerts, and then I also send you guys my notes. I call them our notes. I take notes throughout the trading day, and I send those out for you all as well. So you guys can join me Monday, Tuesday, and Wednesday of next week, and I believe you'll get the replay via email, and the link to sign up for that following this presentation. So again, only the people that registered for this is not wide open to everybody. Only the people that attended or registered for this session are going to get that offer. So thank you for showing up, and thank you for letting me share with you guys the very tools and strategies that I've been using for, gosh, it's even hard to believe, 3 decades. That just makes me really old. Anyway, so should we try signing up? Right, yes. So what you can do is head on over to simplertrading.com /live. So that's this way you can join me for the open house. And that'll be the best way to reserve a seat for the 3 full days of access. Again, Neil, David, myself, Simpler Tech. So for sure, just head on over to simplertrading.com /live. And also, you'll get the link via email as well. So this ought to work. And then you'll also get that email following up with the replay and then access to the open house for next week. You know, if you want, get the indicators installed by Monday. And on Monday, I'll show you how to get the auto chartist and a couple other things that I'm doing right now in earnings season, how I use a couple other tools, a lot of other very cool free tools, like how I use the ETFDB site, how I use a scanner to check for earnings, how I use a kind of force rank site to understand earnings expectations, because we are smack dab in the middle of earnings. So you guys are going to get a little extra bonus next week in that we've got to look at some of the shock waves that earnings are creating for a lot of our futures. So really cool week to be doing this. I'm very excited. So let me see here. We'll be talking about Mark, we'll be talking about, how you doing, buddy? We'll be talking about that. Heck, we'll talk about that tomorrow in the room if you want, no problem. Is the Auto Chartist Volatility Analysis page only available if you're a subscriber? Nick, yes, but I'm going to show you how to be able to use it. Sign up for free and then use it after even the trial is up. And then also, if you love it so much, I'll show you how to get it very low cost or even through a lot of partner brokers. So I'll give you all that on Monday and walk you through it. All right, let's see. My pleasure. I appreciate that so much. Thank you. Thank you, Drew. I really, really appreciate it. Mark, by the way, join me in the Bitcoin session at 10 in the member webinar room. That's a perk. Yeah, and we'll talk about how to day trade. I've been talking a lot about day trading the short-term time frames. You bet. No problem. Do I cover individual equities in the room? Jerry, we have simpler options, which is more, equity oriented, but, part of being a futures index trader is understanding the heavily weighted names. So while that is not the dominant concentration for the conversations we have, of course, inevitably, there's no way to talk about the Dow without talking about Boeing and Goldman and 3M and their impact as heavily weighted names. So it really is limited to the heavily weighted names within certain ETFs and certain futures contracts because they have an impact on our trades. There's just no way you can trade futures without understanding those heavily weighted names. Let's see, what else? Thank you, Newell. I really appreciate it. Thank you. Bryant, thank you. Voila, thanks very much. So yes, next week, MC. So next week, so a lot of you are enjoying the open house at Simpler Options, which is great. Some of you know that I'm in there, talking about some ETFs. Well, this is my main hangout. So Simpler Forex and Simpler Futures, we talk about currencies and commodities. That's where I'm at most of the day. And that's going to be where we have the open house next Monday, next Tuesday, and Wednesday. We actually start at 8 a.m. Eastern in the Simpler Futures chat room. Okay? On the Dropbox text can, we're going to have that go live either tomorrow or Monday because I just got that template working for us on the TradeStation. So I'll have that available for you guys next week. You bet. So you guys will get the email to join me next week. You bet. All the chats are recorded too. So let's say you can't attend the chat live or you miss one of the sessions. My members, you get the chats recorded. We keep an archive, right? And this particular session for everybody will be available shortly. Chris, thank you very much. I appreciate that. Yes, Deb, I'll talk more about that Monday, the deal with TradingView. I can't take credit. Jared, I think, twisted their arm, and we got a good deal for TradingView for you all, and I'll talk about that. I don't have the link handy, but we'll definitely talk about that on Monday. All right, gang. I think we got everything covered. Cool. All right. So you have the building blocks of what we're going to start to talk about on Monday. So if you want to do a little homework between now and then, set that up on your charts. Come join me on Monday, and we'll start putting all the pieces together. We'll do so in a live trading environment because, heck, that's the most fun. You can see the trades we send out live throughout the day. And, here's another cool thing. Keep an eye on silver, gold, crude, NASDAQ, and ES. These are positions that we put on today. And we have some upside targets, which, by the way, we use Darvis and auto chartists to identify. So not only do I use those for entries, we'll talk about trade and risk management next week. Okay? All right. So again, big thanks to everybody. Thank you for hanging out with me. I've been looking forward to doing this and showing you guys what we've been up to. We've had a great couple of weeks. Some of my members were telling me today, one of them said, Rog, I'm only up 20% in the first 20 some odd days of January. I said, only 20%? That's fantastic. And the reason he said only 20% is two of the other members mentioned they were up triple digits so far. So, hey, so far it's been a really good beginning of the year, and we're really looking forward to more follow through as these narratives mature. All right, gang. Thank you, Nick. You're awesome, my friend. You're more awesome. Am I going to be on the Money Show? Yes, Dan, I'll be in the Orlando Money Show. Okay, and we'll be sending out information on all that in the next week or so. All right, my friends, take care. Thank you so much. Be good to each other. I'll see you on Monday.